Hey, it's Jason Coleman, your favorite celebrity loan officer. Today I have a special guest, Wendy Hubbard with Tax Shark. Wendy, how you doing?
Doing super. How are you?
Great. So I reached out to Wendy the other day, and I thought, you know what? I wonder if I'm withholding enough taxes on my W-2s. And we have a couple months left out of the year, so I thought it would be awesome to bring her on board to kind of explain to you guys what the tax brackets mean. Now, I thought, okay, so if I'm making $100,000 or $200,000 a year, that I'm paying, like this or this across the board, but that's not the case. So I brought Wendy over to explain to you guys how the tax breakdown works for you. So Wendy, what's going on with these buckets?
Okay, so the tax system, the way it's set up, is called a progressive tax system, and you pay a portion of each of your income into each little bucket. And so I came with an illustration. Let's say, for example, that you're a single taxpayer and you are earning $175,000 a year. So we've got $175,000 here. And the way it works is you can peel off the first $12,200 of that income is going to be tax-free because that is your standard deduction for 2019. So that goes in the 0% bucket.
$12,200 for a single person.
Correct. So you can double that if you're married filing jointly. Okay. And then the next $9,700 that you earn is going to be taxed at the 10% rate. So that'll go in the 10% bucket.
Okay.
And then it continues along. You've got $29,775 will be taxed at 12%. And then $44,725 will be taxed in the 22% bracket. And the next is a big chunk, $76,525 at the 24% bracket. Yeah. And that leaves it's getting worse, right? That leaves a little bit left, $14,275 that will be taxed at the 32% tax bracket. And the reason that really matters, if you want to look at it in dollar figures, is if you had $175,000 in earnings and we're taxed at 32%, that'd be about $56,000 that you would pay in federal income tax. Whereas with this system, you're paying $37,316.50.
So it's nice to know that you're not actually paying, if you're making this amount of money, you're not actually paying just this straight tax rate across the board.
Exactly. And the top tax bracket right now is currently 37%. The tax brackets have decreased as a result of the tax reform that started in 2018. That is set to sunset December 31st of 2025 unless Congress makes it permanent. So
I've always been told that 3 streams of income are how you stay alive. And so if you own a business, you can also, and your W-2, like I am, I own a business and I am W-2. So I'll be able to. Now we're filing joint, so we're able to take the deduction of 24.4?
Yes, 24.4 for married filing jointly.
Okay, so then I get to take that right off. Say I'm making 175, I get to take that right off the top.
Exactly.
Of the 175 before I start this whole progression of the government taking my money.
Exactly. So this scenario here is for a single filer. Now there's head of household as well, so that has its own. I believe the standard deduction for 2019 is $18,350, but I'm not 100% sure on that.
A lot of laws, a lot of rules in the tax world, huh?
Yeah. So now you bring up a good point, being a W-2 and then also having a business. That gives you a little bit of wiggle room as far as your deductions go. And this example just showed taking the standard deduction, which is more common now that the deductions are so high. But there are still people who itemize their deductions, which can give you an opportunity to pay even less in taxes.
I looked at that itemization, and man, you got to have a lot of deductions to get up to
be over 24.4.
Yeah.
Right. Which is why we're not seeing that as much. Now, I do see that sometimes on the single filers, because if you are a single taxpayer and you are paying all the mortgage interest yourself, and you're paying state taxes, real estate taxes, potentially making any charitable contributions, you can reach that $12,200 limit and potentially itemize if you exceed it.
Yeah, I'm kind of frustrated with the new deduction, because owning a home, you used to be able to deduct your interest, right? Mm-hmm. And now it really doesn't even add up. Unless you have a big home or a big loan.
Yeah, it's a double-edged sword because on the one hand, if you do have a lot of mortgage interest, then it can get you that big deduction, but you do have a big deduction with that $24,400. So let's say that you're making some good money, you're paying that mortgage down, the interest is declining, you're still getting that $24,400 deduction. So,
yeah, because if you don't have that, then it is a benefit to you if you don't have that kind of deduction, right?
Exactly.
So let me ask you, if I do a refinance and I pay a discount point, is that deductible?
It is if you, it has to be spread over the life of the refinance.
The life
of the loan.
Oh, okay. So every year you would get to take a little bit of that
chunk,
discount. Yeah. And most people don't stay in their homes or refinance every 7 to 10 years now, I think it is.
Correct.
So.
And also you would have to itemize to do that.
Oh, okay. All right. So maybe points aren't that good of a thing to pay.
Right. You have to look at the payoff, the reward and the payoff time for it.
Yeah, for sure.
If it makes sense. Well,
Wendy owns Tax Shark, and taxes are coming up in a couple months. And if you have questions and you are concerned about, I know the economy's been kicking butt this year, and maybe people are making a little bit more money than they thought they would. So I think it's a good time to reflect on what you're making and have you withheld enough going forward so you don't get stuck owing Uncle Sam, right?
Right. It's the perfect time of year for a checkup, and you can look at your year-to-date pay stub, see how much your earnings are for the year, and also how much you've had withheld in federal income tax, and see. We'll share a link so that you can, or you can contact us, and we'll point you in the right direction of where to figure out how much tax you should have withheld, so that you can make any adjustments to your withholding before year end.
So Wendy's number is going to be over here. My number's over here, and we're going to put a link in the comments so you can. Just reach out to Wendy if you want a chart of this, so you can see and do your own math on your withholdings this year. It's too hard to just say this or that, depending on everybody's scenario is different.
Exactly.
Right? So if you want to reach out to her, if you want to have Wendy help you with your taxes this upcoming year, please reach out at any time. Appreciate you joining me today, Wendy.
It's my pleasure to be here. Thanks.
Awesome. Until next time.